Good day, everyone. Well, the strong jobs report. The question is, can the majors continue their uptrends? So far, things are looking okay. The Dow has moved back above 20,000. As we all know, the non-farm payrolls came in well ahead of estimates, and that gives the Fed more room to hike interest rates. And also keep in mind that we've got the tax cuts, the reduced levels of regulation, and more spending on infrastructure, and that should all serve to boost the economy. Now, the general market has been in an uptrend. We're seeing that tech juggernauts such as Amazon and Google and Facebook, they've been having a bit of trouble. And you can see that Facebook had an outside reversal on high volume. So it's possible that you could make a little bit on the short side in a name like that with that kind of formation. However, keep in mind that depending on your time frame, the overall uptrend in the NASDAQ 100 remains up, and these names, which tend to be the tech juggernaut leaders, with a market that goes higher, these should go higher as well overall. And Netflix right now looks like it's consolidating its recent Bible gap up, so that looks okay. Over in the Chinese names, we've got Baba and JD, and they're both getting very, very quiet as they're trading. Well, Baba's trading tightly sideways, and then you've got Momo, which is attempting to head higher. And these leading Chinese names, they overall remain in their uptrends, so that also bodes well. We've got NVIDIA that's attempting to resume its uptrend after that short-term top that it had a few weeks ago, and it currently is moving closer to its prior highs near 120. We've got VEEV, that's moving above the moving average resistance after it posted a pocket pivot with a mid-bar close yesterday. So that's looking all right. Not looking so good is Amyav. That's probably, that probably needs to come off the list because it had a bout of selling after it got quiet in the pattern, and it looked like it might try to take a stab higher, and it tried, but it had a high volume reversal, so it looks pretty unplayable, at least for now. You would have to right this this flaw in its pattern, once again, maybe issuing some sort of pocket pivot like it did twice before. But that's probably going to take a number of days for it to set up, if it does at all. We also have we got a question about GCOS, about it seems like it's getting extended, and it's true. I mean, relative to its price history, it is extended. It's well above its 10-day line. But for those with longer time frames, one might want to keep a core position. And if you look at the weekly chart on GCOS, it's looking pretty good. So that all comes down to one's personal trading style. That is the time frame parameter. But if you're on more of the type that we've advised, to take profits when you have them, when a stock gets ahead of itself. GCOS is getting somewhat ahead of itself here. You might want to keep the stop very, very tight on this, because if it heads all the way back to its 10-day, that's a long way back. So you want to be mindful of how this one trades over the next few days. Let's see. We got also we mentioned AGX, that got support at its 50-day, and that seems to be bouncing here. The volume right now is minus 48%, so it's not a very convincing bounce as of yet. We also have CUDA. That one had that knee-jerk sell-off, and then had a pocket pivot the very next day, which can be frustrating. and after the pocket pivot, it pulled back on lighter volume right to its 50-day. And today it's up. The volume, however, is at minus 54%. So it needs to have more convincing volume to the upside. Right now, it just looks like it's just still kind of, in a way, stuck in this sideways pattern it's had for a few weeks. Over in commodities, we've mentioned before that it looks like the Commodity Research Bureau Index, CRB Index, bottomed in early 2016, and it's been on an uptrend since then. Should global economies start to mend themselves, and it looks like there is some small evidence of that happening, and also in the U.S. with Trump at the helm and with stronger economic numbers coming down the pipeline, that should bode well for commodities, because strong economies need commodities. So it's not too surprising that the CRB looks pretty constructive right now. Gold and silver, well, you know, we always said there's so many cross currents to these things, so I wouldn't really want to make too many predictions about these types of commodities. And at that, you know, we can go ahead and talk about some of the other stocks. Also, we've got a lot of names on the focus list. A couple of them should come off, but right now I think even with the ones that we would remove, we still probably have about, what, 20 or 21 names, would you say, Gil? Something like that. So,
I think so, yeah.
It just points still to a market that...
let me pull down into this, and whoops, take a quick look. We have 22 names right now on the list, but I think you're going to see Steel Dynamics looks like it should come off. You know, I would point out that I think this market is very, very difficult to make any real progress in. It's hard to make significant upside. Most of the trades, I think, are scalps, and you're trying to be opportunistic in most cases, because if you look around, things are mostly choppy, and then you have areas that are breaking down, like the Steel Dynamics has violated the 50-day and doesn't look like it can get a rally going here. I think if it headed to the 50-day, I might look at it as a short, the same way I looked at X yesterday, but X is hanging just below the 50-day moving average after a big pocket pivot, which is kind of bizarre. This thing is completely schizoid, Dr. K. It breaks down hard, and then it rallies back to the upside, and then it can't go anywhere. So you know, you start to wonder whether you can even make any real money on this unless you trade it on a contrarian basis. So basically, you short it on the moves to the upside above 34, and then cover below 32 and go long. You know, and that's basically what you've got. It's the same thing with this CUDA situation. That thing just drops out of bed. It actually hit the 40-week line on the weekly chart, and you can see that here. And that's where it got support. So if you're watching it, you could have seen it hit that. And you know, in this market, it seems like the ugly duckling kind of rules the day. And so if you step in on something like that at that point where it's really deep down and at a sort of a last stand area of support, a lot of times you'll catch a bounce. But it's a tough way to have to operate, because you're trying to catch bigger trends if you're going to make big money. And I'm not even seeing much of that, say, over the last couple of weeks in terms of, you know, 10, 20% moves. I think the Glaukos is one of the rare birds in that regard, and that's up, what, 20% since we put it on the Bible Gap up here. So that thing's done pretty well. So you know, you're gonna hold it or take profits on that one. So what else we got on there? It's looking a little dated here. The AKS is off the I believe it's off of
Yeah, we took that off. But we got like some of the banks like Zion, which poked through the 50-day yesterday, but today it looks like it's trading better. The volume rate is 51%, so that looks like a potential bounce here.
Yeah, and see how you have to buy that? It dips below the 50-day line, and it looks like it's ready to blow, and the volume's up. See that yesterday? And then it turns around and goes back up. I made some money yesterday, the last couple of days, being short Schwab. I actually shorted it on Wednesday, and then got a nice gap down move. I covered into that, and I'm glad I did, because look at the next day, it's boom, right back up to the 50-day line. But see, that's all you're getting, and yeah, are you going to make 100%, 50, 100% in a market that just chops around like that? Hard to say. So I don't know. I feel like I'd probably do better going golfing or something in some cases. But you know, a lot of stocks are hanging in there, so you can't really fault them on that basis. So maybe we're setting up to go higher. We'll see how today's rally moves out. But I didn't really see the jobs number as being all that strong. It's 227,000 jobs. You need at least 250 to 260,000 just to keep up with the population change. So it's not a blistering jobs report by any stretch of the imagination. And I think the U6 unemployment rate ticked up to 9.6%. So I think the market just, what it does is just scoots one way and then scoots the next, depending on what the news flow is and how it wants to interpret it. So money flies in, money flies out, and the net effect is that you have very few stocks trending higher, but things are chopping around in what you could call relatively constructive patterns, assuming they don't fall out of bed anytime soon. So I think that's something we want to keep an eye out for. And Dr. K, I would say, you know, I wouldn't be sanguine about names like Amazon, like, oh, if the market goes up, they're going to go up too. Well, there's also another way to look at this, and that would be that if you start seeing these all breaking down, so we got Google as a leader, and that's actually a short at the 20-day moving average this morning. So if you like to take a bifurcated approach, and I don't mind being long and short things at the same time if I have the right setups and I can keep risk to a minimum by having a nearby stop point. So in this case, 827.05 is where the 20-day exponential is, and you're trading at 822.35, less than 1% away, like more like 0.5%. And that's potentially playable. I think Facebook also.
Yeah, these names are in terms, you know, Facebook, Google, Amazon, Netflix, etc. If you look at the weeklies on this, they are the leaders. They continue to go higher with a higher market. But that's a general statement. It's correct. But in terms of making money, it's an awful slow way to do it, because these things often break through their 50-day and even their 200-day as they go higher. So you have to pick your spots, as we always tell everyone. Obviously, something like Facebook could provide some sort of short-term short opportunity, and you got an Amazon that gapped lower, that could become a short candidate. But again, a lot of these short plays tend to be not thematic plays, but short swing trade type opportunities. And as far as the unemployment report, I can see why the market took it well, because the estimates were pretty weak. And so relative to the estimates, it trounced those estimates. And as far as the overall jobs data goes, I think that maybe it was just sort of a sigh of relief that the report was as strong as it was relative to predictions. I think that bodes well. But the overall number itself, like you were saying, isn't very impressive. And if you look at the month-to-month jobs data, this month was good relative to prior months. But that's saying that prior months were pretty weak, for the jobs data. And that U6 is also a concern, because there are a lot of people who have given up looking for work, who aren't counted in the unemployment data, which is a distortion of the data. If you're just so fed up with trying to look for work, you just give up. That's not a good sign. And then, of course, we know there's other indications that unemployment is even higher than what's reported in the U6, which is nearing 10%. So these are obvious concerns that should not be ignored.
Yeah, and I would watch some of these big stocks like Facebook and Amazon. If they continue breaking down, or you start to see more of this happening. I saw Microsoft was another one where you had a big viable gap up after earnings last week, and look at that thing. It's failed. It's now back below the 20-day line, and it actually becomes a short at the 20-day line, and guess what? I'll short it. So, I'm an equal opportunity trader there, Dr. K. Somebody's got a question
I think
for you.
That's the best way to be in this kind of market, as we've said, that you have to maintain this flexibility. I think more so now than in most any other markets we've encountered. I mean, if you look back at the last few years, that flexibility is key to being able to come out ahead of what can sometimes be very schizophrenic markets.
definitely. Here's a question. Some of these, uh, I'm just chuckling because it's kind of it strikes me as a silly question, but it's still a question. In reading the book, I have a general question. If price is 1% above the 10-day simple moving average and has a pocket pivot, is that a viable pocket pivot, or is 1% too far from the moving average? I would say if you're 1% away from the 10-day line, you're probably close enough. So, you don't have to buy it exactly at the 10-day moving average. So, and if you can't allow for 1% in your entries variation, then you're in trouble. So I think you're trying to be a little bit too, shall we say, anal retentive on your entry there. Like 1% is close enough. You can't get too carried away. Dr. K, you have anything to add, or did I hit the nail on the head?
I think that if you have an issue, if also this person has an issue with buying 1% too far above the correct or the optimal buy point, if you're sensitive to that, then many of these stocks are just going to be too volatile for you. So you really need to know your trading personality and your risk tolerance levels to be able to use those as a guide as to what types of stocks you wish to buy.
Let's see. I'm going to run through some other questions real quick. DG, Dollar General, that's a dog. Looks like a short almost. See how that, like it's a head and shoulders, so that's one I've been looking at as a possible short. That actually looks actionable here, but it trades 3 million. Yeah, that trades plenty. So put that on your short sale watch list here. That might roll over. I wouldn't be surprised if the market came in from here. So you jerk one way, you jerk the next. I don't really hold too much overnight, and try to keep enough cash in my pocket so that I can take advantage of contrarian swings, believe it or not. I'm not really trying to play any trends here because there aren't very many. And I can't play Glaukos or GKOs because A, it's a biotech, and B, it's too thin for me. FCX, yesterday I saw this thing rallying up to the peak, and I actually shorted it as a test to kind of see if it was weak or strong, and it just kind of sat there. So I covered it at the close yesterday. Didn't make any money, didn't lose any money, but now today it gaps down. So I'm a little skeptical of that. I'm not going to buy it up there, but maybe down at the 20-day, if it holds, then you could buy it, I guess, and use that as your stop. But if the market starts to come unhinged, this will come down, I think, lower, and it could come down as low as the 200-day line if things start to break apart. And I would give this market a even chance of going lower versus higher from here. So just based on some of the action in the stocks, we could easily start to break down and roll over, but it's not like you have a huge amount of evidence for that just yet. But you're starting to see some cracks in the market's armor in terms of some of these big stock names breaking down or getting hit. If the unemployment report is so strong, or the employment report rather is so strong that we're going to have a rip-roaring economy, then you would think that coppers would be doing well. You think that X would be doing better and roaring, but they're not. So I don't know. What's PHI? Oh, Infi. This is another stock that's just back and forth, but just kind of sitting in a base. So I don't know. If you want to buy it, go for it. I guess your stop would be the 10-day line. That would be your out point if it doesn't work. So, but this one's kind of choppy, and it seems to me like it's better off being bought on weakness rather than buying when it's up. And I think earnings come out. When do earnings come out on this one, Dr. K? What do you got?
Let me check. Let me check the app. Actually, that's a lot more accurate than some of these other places. Okay, IPHI earnings are due March. Sorry, hold on a second.
7?
Sometimes the apps will have bugs too. Okay, February 6th. The app seems to always be one day before you. So anyway, it's going to be 6th or the 7th.
Well, you can always just check briefing or check the company's website. So
yeah, if you want to pinpoint the exact
briefing is saying February 7th. So you got earnings coming up. So I'm not sure I'd be doing anything with this, frankly. Square, Square is just kind of putting me to sleep. It bounced off the 50-day line today, so that's kind of your last stand. It's holding the 10-week on the weekly chart, so that would be your last stand entry point right there. So in other words, you'd want to see it hold that, and it's doing it so far today. So that that looks like a reasonable lower risk entry using the 50-day moving average as your selling guide. Now the one thing we know from the 7-week rule now is that it tends to hold the 50-day. It doesn't obey the 10-day, and we don't count the 20-day, which it doesn't seem to obey that one either. So now you're at the 50-day. That would have to be your maximum selling guide for the stock right there. Also, when it pulls back into the line, the 50-day line or the 10-week line on the weekly chart, which we have down here, that would be your lower risk entry. And then the assumption is that you want to see a move up off of that. And I believe earnings are coming up, not till early March, so no real issues there. So
Yeah.
AAOI applied to Opto. It had a pocket pivot on January 3rd. No, it didn't actually, because it wasn't off of the 10-day line. So why are you asking if it's viable? It seems to me it's in a V-shaped formation. It's back above the 10-day line, so I don't know if I'd be buying it when it's up like that on light volume. So you should be able to see that, and so you decide if you think you want to buy it here, you think it's going to shoot right out of here, then obviously you'd be using the 10-day or at least the 20-day as your stop. Otherwise, on something like this, when you're up this much after a viable gap up type move here, 3 weeks ago, then you're up a fair bit, so you'd want to be buying this on pullbacks. You would not be wanting to chase it here. And I think you're also making the psychological mistake of seeing something up like that and getting all excited about it, when you should probably try and be more opportunistic and laying back on stuff. That's been my approach, and it's worked for 4 years, and we'll see if it works for a 5th. So someone's asking about Twilio. Pocket pivot on pivot. Someone put out a big buy recommendation on the stock yesterday, or the last couple of days, I think it was, and it's trying to come off, but you got earnings coming up, so I don't know. I'm not really thrilled with it. You could take a shot at it, I suppose, since it's above the 50-day line, and use that as your stop. So don't expect us to either bless or not bless your trades. If you see something that you think is setting up on the basis of, say, a bottom fishing pocket pivot, or some other buy signal, and you're above or right at a moving average, say like the 50-day right here, then it is a trade that you could take based on the idea of using the 50-day moving average at 30.14 as a quick stop out if it doesn't work. So that's really what you have to be thinking about. But I can't tell you if this thing's going to get rolling to the upside. It's tried to get rolling a couple of times before, back in December and again back in November, and both times it failed. So if you want to take a shot at it here, there's a rationale, I suppose, for a trade using the 50-day moving average as your selling guide. But other than that, I can't tell you where it's going to go. What did you see in Schwab yesterday? I think it was because that would have been on Wednesday. It was a Fed meeting, and the Fed seemed to be iffy to me on whether they would be raising rates. They almost seemed like they were saying that they're expecting to do 3 this year. It seemed like they were saying they're going to wait in March, and maybe they have the impetus to do that now. But I would ask, why is gold rallying if today's jobs number is so strong, and why are bonds trying to rally here? So they're not huge moves. There aren't any big trends here, but it's not like it's seems to be confirming some major economic strength necessarily, or the Fed's going to be raising rates. So on that basis, I thought the stock was a short. I could also watch it reverse at the 620 because it's tried to break out. It bounced off the 20-day line, went back above the 10-day line, and on the 620 chart, based on my theory, I came after it, and it turned out to be successful. But yeah, it's good for a 5% breakdown. So if you're long 25 or 30% position, what do you make? 1.5%, whoopie-doo, and then it's not really going anywhere. I don't know if this puts it back in a shortable position, but again, I think you're assuming, if you're going to short financials, you're assuming that interest rates are not going to be going up as much as people think, and it's already baked into the cake. Now, I did notice there's an article talking about insider activity right at the peak on stocks like Goldman Sachs and JP Morgan and other banks selling stock, but as if there's some scandal in the making here that they're all bailing out and they're all going to top. But insiders will sell stock for a variety of reasons, And since these guys have watched their stock come from down here, say in JP Morgan's case, from 50, a low of like 52, all the way up to 86, well, I would think you might sell some stock if you had a hankering to do so and take some money off the table if you're an executive with a bunch of options vesting. So I don't think I'd get all that excited about that. Same thing goes for Goldman Sachs. So, you know, these are neither here nor there, and I think I got away with the trade on Schwab more than anything else. And I'd say that for the most part, whenever I'm making money on a trade, it almost seems like you're getting away with something. Does anybody else feel the same way? It just doesn't feel like, you put yourself in a position to get lucky, but then you kind of got to get lucky. And sometimes you don't get lucky. Anyways. TMO. I don't know. I don't like this pattern. Thermo Fisher, it's just a very choppy weekly pattern, and it's up today. So if you think this move is real and it's pulling into the 200-day, then once you could, I guess, initiate a trade right there on that basis using the so somebody saying, I'm not worried about the entry. This is a person who asked a question about the pocket pivot, the 1%. Okay, book says pocket pivot has to originate fairly close to the MA in order to be viable. Oh, that's what you're talking about. If it starts, if the stock is up 1% above the 10-day line at the time it has the pocket, so the low of the day of the pocket pivot would be 1%. To me, that's close enough. But, you know, it's like 6 of one, half a dozen of another. That's close enough for me. So I also don't necessarily buy pocket pivots. I look at a pocket pivot as a sign of strength, and then I look to buy on a pullback following the pocket pivot. So even if it's a little extended from the 10-day line, I don't really get too worked up one way or another. I try to be more opportunistic and a little more shrewd about my entries. So let's see, Dow's up 162. What do we hit a peak, like 182 or something like that? And we're back up. Here's the Dow. We're back up towards the old high. So looks pretty good. The Nasdaq's churning a little bit, so I don't know. Yeah, I just think you've got this news-oriented market that just flips one way and flips the other. So if anybody out there is making big money, let me know, you know. But it doesn't seem like it's that conducive. So, well, you're going to learn about, actually, you're worried about pocket pivots. We're going to go into some detail on some of the newer things we've been looking at in pocket pivots at the mini conference. So, and I think we're about 2/3 sold out of it now, so it's moving along pretty well. NetEase is a good example. January 24th pocket pivot while stock is 3% above. Yeah, you know, but with this one, let's see, January 24th is here. That's not a pocket pivot. That's far too extended. So you could say this day here, let's see, what is this day? Well, this day could be a pocket pivot if you wanted it to. But see, I wouldn't even be worrying about that. If I saw that, what I'd be looking for then is a pullback into the 10-day line, and then I'd come after the stock at that point. So I wouldn't be, you know, worried. And this one I would have been buying it down here as it was pocket pivoting off the lows. You see the bottom fishing pocket pivot down here. So, and notice how that's above the 10-day and the 20-day, but it's below the 50-day. Sometimes you'll see them do that. They'll bump up to the 50-day and back down a little bit. If it does it on light volume, sometimes that can be an entry, and then bingo, you're right up through the 50-day line. So Facebook, you know, looking like it's having some trouble at 53 cents. So I don't know. Dr. K, I was going to ask you about Netflix. Doesn't it bother you that after the what happened to the 6-day rule on viable gap ups? If the stock doesn't get moving after 6 days, is that a sign of weakness? Do you think in this case Netflix is just setting up to go higher? What's your take?
It's only a sign of weakness if it breaks below the low of the viable gap up day. In other words, now that this is traded, first of all, if you had bought it on the viable gap up, you wouldn't have sold it because, I mean, it only went, what, 1 to 2% below the low. I don't even think.
Right.
Yeah, not even 2%. So, you know, you'd still be sitting in this, and it's, you know, it might be putting you to sleep, but the markets also have been not particularly conducive to strength, especially these kinds of names. I would say that Netflix is the strongest right now of the FANG stocks because it has held tight. The volume's getting very quiet, so it's a constructive pattern. I would sit tight with this one if you hold a position. But if it does break below, well, I see it went below the low of the gap up day, and so you could keep a looser stop, say if it breaks below 137 point, basically 137. That seems to be the low. That occurred after the Bible gap up. So you could do that, or you could just sell if it breaks below the low of the Bible gap up, which is 138.25. But you know, just kind of splitting hairs there. So far, it looks relative to everything. It looks pretty good. So yeah, what's the type?
Speaking of materials, any thoughts about Vail? Somebody asks. Well, it's coming down. You know, it's getting hit. What do you want me to tell you? I'm not going to buy it. I'm not going to. Probably wouldn't short it here either. You have Copper's another one, Rio's another one, I think. But these are all metals. Cliffs, Natural, another one is coming down. I know someone's been trying to buy it. Someone on Twitter that talked to me been trying to buy it along the lows here, and it's not happening. So I don't know. I think these are all pulling down. So you got a day where supposedly you have a strong jobs number. It means we have a strong economy, and the stocks, coppers, and metals, which are supposed to benefit from a strong economy, are down. So go figure. And then, of course, the strong economy, though, comes through on the financials, and they're all trying to bounce, but do these just become shorts in the process? So I'm looking at Schwab as a possible short. But anyways, so that's my thoughts on Vail. Coors undercut and rally. Uh-oh, here we go. Well, I don't know. It's kind of ugly looking pattern. I don't think this is something I'd be buying. It's not really. It's in a downtrend. It's not. It's way down there. I don't know. I mean, it's good for a trade, but that may be about it. And I'm not so sure I'd be jumping all over this. And this means it's bottomed, and you're going to get a great price move. But I think you can get a little bit carried away with the whole undercut and rally situation. Because they're very contextual, and a lot of the best ones occur, I've noticed, when the market is bottoming. You have stocks selling off, the market's bottoming, and the market turns, you see a bunch of these, and so you buy them, and they work really well. I think some of these less likely to produce any real results. That said, if you use this as your low, this is 40.81 over here, and you buy the stock here, then 40.81 becomes your selling guide for your stop. So maybe 1% lower, I guess that's what it is, and then see what happens. Maybe you get to the 50-day. I don't know. But I don't know about Michael Kors, so anyways, let's see, what else? How about GWPH? Whoops, that's not the... this one's coming out with earnings pretty soon, so I don't know. This is a difficult one to peg. This could be trouble, so I don't know. And it tends to be news oriented. I don't know. What's your take on this one, Dr. K? Do you like this pattern? Would you buy this?
Yeah, I mean, it's not lighting any fires for me. I
Not
think
getting
that
all hot and bothered.
just it seems like if you look at the weekly, it tends to go sideways an awful lot. And you can get these little instances of pocket pivots or whatever, but it doesn't mean that the stock is really going to make a move. So yeah, I'm not all that interested in a name like this. Not right now. Not with this kind of pattern.
Yeah, and you can see it's had other pocket pivots in the pattern, but they don't go anywhere. So I guess if you're going to try and buy this, you'd try and buy it along the 112 level, because it seems to just be more of a pullback to support type situation rather than some exciting situation that has a pocket pivot and jacks higher. Contrast this, say, with the Glaukos, where you get immediate positive feedback on this and it's moving, whereas here you get pocket pivots, or I'm sorry, GWPH. Here you get pocket pivots that go nowhere, and Glaukos actually has earnings, and I think these guys don't. So KRO, what's KRO? I know. Wait a minute. What is that? Kronos Worldwide. I don't know. What's great here? You have a stock. It's actually up. It's almost tripled off. Well, it has tripled. almost quadrupled off the lows, but at least tripled. And now it's posting a pocket pivot here, and it can't go anywhere. I don't know if you think there's some great story here, then I guess you'd buy it at here using either the 10-day or the 20-day as your selling guide. But I don't know. Does this get you excited, Dr. K? What do these guys do? Are they a shipping company?
They're in. They make titanium dioxide pigments.
Oh, cool. I like that. That sounds.
Chemical company, and but the product was kind of slow and mushy, since November. I mean, it had that one big run in November, but since then, it's not really doing much of anything. And it's a thin name. It's it's not institutional quality. The earnings, the fundamentals don't really stack up. So I would avoid this one. There's better names out there.
All right. CMD is Cantel Medical. Well, this stock seems to be one of those situations that it runs up and then pulls back to the 40-week line, and you buy it at the 40-week line. So you missed the buy point down here, I guess. Now you're up at the 50-day line. It trades 153,000 shares a day. It's way too thin, I think. So I'm not interested in it. How about you, Dr. K? But if you think it's special, then I think you should have bought it. You can see it gets support at the 200-day moving average, the 40-week line on the weekly chart. So that would be your entry point rather than chasing it up here, because now it looks like it has resistance at the 50-day. Your take, Dr. K?
The last 4 times, the fourth time being several days ago, you had your opportunity to pick some up as it came down to the 40 weeks. So that opportunity's missed. If you look at what it does after the 40 week, and it's done this 4 times in the last, basically in the last year, it doesn't always just. Sometimes it'll get going. The last 2 times it just continues into an uptrend. But the first time it did this, it wasn't doing much of anything for an entire month until it finally got going. So I don't know. I think your risk at this level is higher than it should be. So I would, if you like it, you could keep an alert should it come back to the 200-day or the 40-week rather at some point in the future.
I want to look at some names that I've been looking at that are not on our list. Palo Alto Networks, you can see, has been posting these bottom fishing pocket pivots all the way up. So this thing was buyable on the pullbacks of the 10-day line, and you'll notice CyberArk is also turning. But that, to me, that's extended. You would only buy it on the pullbacks. And today you have a couple of moves in opposite directions. A big gap down by FireEye, which it's undercutting this low, but I don't know if I'd try and play this for a trade. Fortinet is also up on, I guess you could call this a viable gap up, but I'm actually looking at this as something I might look to short on a 620 break here. But we'll see. I don't know.
Yeah, it's also a bottom fishing viable gap up, which occurred after a gap down. So it's more vulnerable in terms of the quality of the viable gap up.
Yeah.
Which is one reason we didn't put on. Ultimately, bottom fishing gaps can work, but the pattern has to be right. That's the key. Is the pattern leading up to the gap up has to be proper, and this one has some flaws in it. So I wouldn't be looking to go long on this.
No, I'm actually looking at it as a short. So, anyways, we'll see what happens. Checkpoint is actually the leader. Symantec is another one that had a big, well, not a pocket pivot, but big support off the 20-day line. See, this is what I'm talking about, an opportunistic entry where you come in, you'd see it coming down, you take a shot at the 20-day line if it's down there and you like the stock, it turns and goes, and that you'll get that sort of thing happening more often than you think. And I mean, CUDA was another example in the same group, of having a pullback like that came off the 40-week moving average there, and that's just kind of how this market rolls. You get these weird pullbacks, and they'll come into support levels, and if you hit them, if you're brave enough to come in and test them out, and at least you're at a point if you buy them. Like if you had bought Barracuda a few days ago at the 40-week line, well, if you're buying near there, then that's 21.34, and you could have bought it at a low near 21.52. So you could have come in anywhere in there, if you're watching the 620, you could see it turn, you might take a shot at it. But, you know, it's still tough, and that's the sort of thing you have to look for as an entry, because if you're buying on the strength up here, that would have shaken you out. I mean, you'd be down 10%, I think, in a hurry, and you probably would have been stopped out. And that is also how this market rolls, you know, where you get these crazy shakeouts and pullbacks to support levels, and that's where you got to try and enter. And if you're coming in late and chasing strength, you're likely to get yanked to the downside and then shaken out. So that's what makes it such a tough market. And you can see net, this isn't going anywhere. So checkpoint's going places. I mean, that thing has continued to go higher, but it's extended here. Now, this is a situation where I would be looking for a pullback to the 20-day line as my entry. So I don't need to own it now, just like with this one, same thing. You know, you want to get excited and buy it here, up here. I don't know, it could go higher, but I think your risk is higher. So you just lay back, and you have a bunch of these on your watch list, and you come into them when you see them pull back to these areas of support. And if it doesn't work and you're stopped out, you're stopped out, you know, but at least you can keep risk to a minimum rather than buying things when they're sticking straight up in the air. And I think that's obviously a much better way to operate in this market. So Merck, didn't they get hit with some news? Well, I don't know. It's a big, slow drug company. It's up, it's down. You know, if Trump likes them, they're up. If Trump doesn't like them, they're down. So it's a news-oriented name, but I don't really see anything here I want to play. Let's go through. So look at some of these opticals. I mean, this one, here's a breakout. It fails, okay? And now this almost looks shortable to me at the 10-day line here. You look at Sienna, here's another one. It has a breakout, and it fails. And now it's rallying up to the 10-day line. This almost looks shortable to me. Juniper Networks, I'm actually shorting it right here at the 20-day line. You had a shortable gap down. It closes off the lows. It's trying to drift higher. And now you're at the point, I think, of no return. You fill the gap here, which is 27.56, just below where the thing is trading. Maybe this thing heads lower. But this whole group is like schizo as well. It's strong one day, it's weak the next. Here's Light, Lumentum Holdings, looks like it's at a short sale position here. Finisar is looking similar. And look at how this thing has, you know, looks strong and then blows up, and then it shakes out down here, and it runs back to the 50-day where it's shortable, and now it's rallying up here, and it looks shortable up here. It's all over the place. And, you know, you don't get anywhere. But these all look like shorts to me. And yet you have stuff like this is holding up. So, and this is probably the only one in the group. ANET, I think, is possibly a short here. Watch this. See how it's been moving up into the 50-day moving average after the shortable gap down. It does go past the high of the gap down day, but so it could fill the gap, and it's getting pretty close to that. What's the low of that gap? 96.44. You're at 95. I'm sorry, 94.72. So the 50-day, yeah. So you're within 1% or so of the 50-day line here, and the high of the gap down day here. So, you know, it's a little of this, a little of that, and could turn into a short, and that's looking like a exactly like a short right there, but closer to the 50-day or this high of this gap, this falling window, whatever you want to call it. Let's see. Market's up 170, Dow's up 170, Nasdaq's up 21.57. Apple had a Bible gap up type of move, but there's really no thrust there. So, you know, this is another thing. You'll get Bible gap ups and then they just sit there. There are some that work, but most don't. And they, you know, Netflix is a great case or a great example. I wouldn't be surprised if this thing breaks down to at least a 20-day before it does anything. So if it clips below the 10-day line here on a 620 sell, I'll short it and scalp it. Now, I've been doing that, shorting it near the highs and buying it at the lows, and it just goes back and forth. And that's all it does. And that's, you know, that's what you get. So Yelp has been on our list. That was Bible at the 20-day line. I actually bought some there, and then I sold into the rise. And then around 43, I flipped short, and the stock's coming in now. So again, another situation where you're kind of going both ways on the same name, only because it's volatile even within an uptrend. They come out with earnings soon. So Grubhub's another one that I consider a cousin to Yelp. It's been holding up pretty well, but now it's breaking the 10-day line, so it looks like it wants to come down. So I'd be stepping aside here and looking at the 20-day as possibly a lower risk entry point. So, and I have to admit, some of these stocks, I'll be long them one day and short them the next, just because they're so choppy, and the ranges they're just chopping back and forth. Finisar is a great example of that. It's a short in here, it breaks, cover it. If you think you can get away with an undercut and rally on this day, you go long, run it up to the 50-day, sell it, short it, and it's just doing this now, short it again up here. And that's kind of how it rolls, It's crazy. Somebody asked, I'm shorting EA. What would be wise to take profit? Well, that was actually a nice short. We talked about it after earnings. You could short after earnings and look for it there. And so it has broken down. The volume's been heavy. I think what you're looking at near term is possible support at the 20-day. So you'd want to figure out where your trailing stop is. So you got to figure out what will I set as a trailing stop in order to ensure that I get out of this thing with a profit. So what would that be? Would it be the high of today, the high of yesterday? Did you short it up near 84 or near 83? Or do you just want to do what I just call a backup stop, which is if you come through where I shorted it, then I'm just gone and get out with no loss, no gain, and but at least you're in position to possibly play what could be a failed base, late stage failed base situation. I know ATVI, I was watching this morning, should have shorted it. It's down just a hair though. Somebody came out this morning and put a $53 price target on it. And you notice though, this is difficult to short because you had a pocket pivot on Wednesday. And that was interesting that EA came out with a weak earnings report. That stock sold off initially, but ATVI sold off and then rallied. And I think I was actually short the stock, and I caught this move and then got the hell out of the way and made a little bit of money, but not very much. And now it's up here, around the 200-day, 40-week line. I think if it broke below the 200-day or the 40-week on volume, I might be inclined to short it. Notice you can see the pattern here. You got a head and shoulders here, so this could be the right peak of a shoulder. So I'd watch this thing when earnings come out. What day did these guys come out with earnings, RTK? Let's see. 2/9, so that's what I'm showing there. Anyways, something to keep an eye on. Facebook's up 55 cents right now. Market seems like it doesn't know. It's like everybody piled in. Now it's trying to figure out what it wants to do. Is it going to go higher? Are we going to roll back and maybe close mid-range? I don't know. Anyways, I hope that was helpful on EA. So it's there are a few things to look at as shorts. I'd look at Delta Airlines. To me, is a possible. Remember we talked about this a while ago, and it's been trying to break out, but it's like a big pod, punch bowl of death, and now it is a punch bowl of death because it's broken below the 50-day line and violated. So I'd be looking at any rally that gets close to 48.64, the low end of this base, and the 10-day line as a potential short sell entry point. Yeah. And you'll see some of the other airlines look similar. UAL, kind of a bigger, ugly pattern, and it's right up in a potential short sale zone. So you could look at that as a possible short here right at the 50-day line with the idea that it's going to break to the downside. Let's see. I think American Airlines is the same situation. It would need to rally back up, though. You'd want to hit a rally. I mean, it's in a bear flag. It could just break to the downside. But notice how all of these, I've been watching these for a while, and they all have this pod-like structure. Delta is probably the most pod-like. And here we have it on the weekly chart, and you can see what I'm talking about here. So, this one I'm talking about, there's a market where it seems to be bifurcating. There's situations that I would want to be short, and then situations that you can trade, I guess, on the long side, but there's nothing really trending. So it's really just a choppy kind of swing trading environment, and it's hard to make big progress either way. So I'm not doing anything that I would consider outside the boundaries of being flat. To me, up or down 5 or 10% is basically being flat. So, and it's been a smaller margin than that, like up or down 5%, 3 to 5. So nothing really spectacular here in terms of big money potential. So just choppy and sloppy, and it seems like I'm keeping up with my bad trades by making money on my good trades and basically running in place. So that's what it feels like. You know, I want to be up 20% if I'm getting some good traction in a really healthy market. And when I'm not, it's telling you something. And when you see things this choppy, it's telling you something. And so what we see in terms of the individual stocks are names breaking down and names, you know, holding up. So you got a Netflix holding up in a nice tight flag, but you know, I'm skeptical of that, to tell you the truth, because this was holding up in a nice tight flag and it broke down. X was holding up in a nice tight flag and it broke down. I wouldn't say it's totally broken down. Steel Dynamics broke down. And you look at, say, what other names? Look at some of these materials names. You know, these things have breakouts and then they come right back in. So what do you got to do? You got to buy them here on the pullbacks. And you step in along here and then hope that it doesn't break the 50-day line. That's what you're doing. So, but you know, there could be news comes out tomorrow that they're not going to go through with some of these infrastructure projects, or the other Republicans put their horns up because they don't want to be getting us further in debt, and there's a lot of cross currents that result from all that, and the back and forth and the pushbacks based on everybody's objectives, which is whether they want to control spending or whether they're just going to go and build stuff all over the place without thinking about what it costs. So you've got these, you got EXP, you know, same thing there. It tries to break out and it's kind of hanging along, but you don't know if, like, tomorrow this thing could go the other way. So it's kind of, you know, iffy, and so the only way you can buy it is coming into the 20-day line and then hope that it holds up. So look at CAT. CAT was looking like it was going to break out the other day and it failed. And now it becomes a short at the 20-day line or at the 50 line, whatever you want to do, and hit it and use that as your quick stop. And if it breaks down, maybe you get to the 200-day line. But again, that's, you know, that's what you're getting here. So there's no real follow through on a lot of these breakouts. Most of the stuff that seems to get the biggest moves are the bottom fishing pocket pivots that I've seen recently in names like Cyber and Palo Alto Networks, for example. But these are beaten down groups. You look at Lava, and then look at these. That had a nice Bible gap up on earnings, but it's not gone anywhere. And it's now had 8 days of going nowhere. So is it setting up constructively? Yeah, volume is drying up. So, you know, maybe it tests the 100 low. Again, that would be your low risk entry point if you're going to come after it. Otherwise, you just got to lay back, I think, and take a low risk entry point. But if it blows below, say, the 20-day line at 98.62, then you might have some problems. Momo had some Momo, but that was basically off the low. So you have to be on these things down here. Then they get up here and you're screwing around with them, buying them on the pullbacks, which the 20-day on Monday was good. And now you're back up to the highs, but you'll see it's stalling, and so maybe it pulls back to the 20-day. But there's nothing definitive, nothing powerful here outside of the initial move off the lows, which is not a bad move. I know I was picking this one up in here in the low 18s, mainly on the basis of the fact that it hit the 200-day line and then you retested on lighter volume. That's a white copy and retest. And that is, so here's the test of the 200-day line here, then you bounce off and you pull back, your volume's drawing up. So I actually will come into it here on that basis. I don't sit around waiting for a pocket pivot. By that time, the stock's already up here, and I don't want to be chasing it up there. So I get a nice move like that, and I think I got like 10-15% and then bailed out, and then I've been trading it in here, buying out of the pullbacks and selling it into the moves up. But it, you know, net, yeah, it's trending higher, but it could disappear pretty quickly. You know, with earnings coming up, who knows? So I like to take the profits when I have them, so, and then try to re-enter on pullback. Someone's asking, on occasion you show MACD on an hourly chart. Can you please explain when and why? I show MACD on a 620 chart, so that's I use MACD on a 5-minute 620 chart. If you don't know what that is, go back and read or look at some of the old webinars. Do we have something on a fact about a 620 chart, Dr. K?
I think we do,
Yeah,
at least
so
a couple.
Look it up.
Yeah, I mean, just type in 620. I just I'm gonna make double sure. I think we have at least a couple of things on 620. Let me see. Yeah, we got something on 620.
Yeah, so read
averages.
that. That's the MACD.
It was
but I wouldn't get carried away with it. I'll be covering the 620 chart in the mini conference, so that's one of the new developments in short selling that we also can use on the long side. So anyways, what else? Mobileye, we only got about 4 minutes left. Mobileye is, here's another one. I remember getting on this one at the end of the year. You got a nice move up, and then, it sets up, it goes a little higher. Now it looks like it might be rolling back. So, it's hard to figure out here. I guess if you want to buy it, you see it pulling into the 40-week line here. That would be your low-risk entry point, which I guess coincides with the 200-day at 4106. So, that's kind of what you have to be doing there. You'd have to be looking to pick these off early in the pattern, and then they start to just screw around. They're up, they're down, they're up, they're down, and that's little more than like day trading, swing trading. So now Facebook up 46 cents. I think I saw it lower than that earlier. Yeah, it was a little, I think it hit a low of 131.06. So don't be surprised if it turns red. I wouldn't. I didn't think their numbers were all that exciting, and they actually show that things are going to slow down. They even said that their revenues are going to be flat to down for the year as they're investing in other things. So translation is their core business is slowing down, and they're trying to figure out ways to monetize other parts of their business. So if they're successful, then maybe the stock goes higher. If not, and here's the pattern again. But yeah, you're kind of way up there in your late stage, and if this closes down for the week on heavy volume, that looks like a double top, So I don't know. I'm not. JD is well behaved. Yeah,
Well, also,
that's
if
okay.
keep in
Go
mind
ahead, Dr.
that with these leading, if you start to see further breakdown, because we're seeing some weakness in these names, but you start to see the conditions worsen on a technical basis, obviously that's a red flag. So, obviously these are great names to monitor in terms of internal market health.
Yeah, and that would be the point I would make about these. And they could be telling us something about the market also, because you're seeing, and these were the names that were leading the market recently, because the Nasdaq's been outperforming and making new highs even before the Dow broke through 20,000. But Microsoft, Google, Facebook, and like I said, I think these are probably shorts. Facebook, not Netflix, Amazon. Are there enough there to make a FANG? No, there's no N. We need an N. But, look at Intel. Intel is looking really strong. It had a pocket pivot last week, I think it was, and it went higher, and now it's failing, and that looks like a short to me using the 20-day line as your stop. Priceline. This one's trying to hold the 10-day line. They came out with earnings on the 15th of this month, I believe. You can check the company's website to make sure. But, if that fails here, and it could, it's run into some selling near the highs. So that's up near the highs, very sloppy looking base, and we'll see. So keep an eye on all these, because if they start breaking down, then you know what it's telling you. It's telling you that the market's weakening under the hood, and there may be some dues to pay here. Get to JD, someone's asking it. It's well behaved, but again, keep in mind here, it's this big ugly pattern. You're near the highs of the range up here, so you might be in a position where you're going to run into some overhead. Earnings come out, I think, in the next few days. You can double check that. But it's holding in okay, but at the same time, it's rallying up into the 10-day line on light volume today, so it's kind of wedging. So, healthy, I don't know. If you bought it down here and it's run up for you, then you're doing okay, but I'd use the 20-day line as my trailing stop or selling guide. That's what I would do. You can do what you want. Let's see. Tesla. Well, there's nothing really on Tesla to talk about. It's had a big move, and it's just going tight sideways. Earnings are next week. So, I played this stock and on the upside and caught some. But again, percentage-wise, 220 to 250 is about 10%. And if you take a 25% position, well, you'll make 2.5% to your portfolio, and where do you give something like that up somewhere else? So what's the net result of playing a lot of these, unless you play one and you pick the right one and you load into it, which in this market I think is a risky proposition. I know somebody was asking me yesterday, is Gigamon a play on the long side? I guess they still own this thing from when it was a leading stock, but here's an example of a stock that forms a really ugly head and shoulders. You see this well-defined neckline, and it just blows through it on a gap-down move. I think it was here, and it's going lower now, and it's just amazing to me how that which was a great leader not too long ago, just a couple, 3 months ago, is just completely busted apart. And of course, we know that also from Acacia, which continues to go lower no matter who puts out a buy recommendation on it. I think they're just trying to get their clients out and hold it up just long enough so they get out above the IPO price. And this thing just looks like garbage. Gnarly. Anyways, let's see. Facebook up 37 cents. I am short that turkey. So I want to see it blow apart. I think it go back to 100. How's that? What would it take to short Tesla? Why would you want to short Tesla? I wouldn't do anything with it ahead of earnings. So probably a break below the 20-day line on heavy volume would do it. So hard to say. I mean, a couple of things you'll note here is that it's at the top of the range, so it is vulnerable to getting hit. So I think in this case you would treat this, and when we're talking about examples, if you're a newbie, try and learn some things while you're watching these webinars, okay? And then maybe a lot of times you'll answer your own questions. So if you look at something that is at the top of its range, like a Delta Airlines, well, I've written in our short selling book that usually the sign of failure when a stock is up near the highs of a pattern like this is going to be a volume breach of the 20-day line, and you got that on Delta Airlines. So if you're looking at Tesla and it's holding above the 10-day, well, it's just below the 10-day, but holding tight along the 250 level. But it's above the 20-day line, and the pattern looks like this, which could be a big punch bowl formation. You don't know. Maybe it's the start of a glorious new breakout, a new uptrend to 500. Who knows? I don't know. But you are vulnerable to some sort of breakdown here. So that's where you start your little radar go up, like with the Delta Airlines. And that took a few weeks on Delta Airlines before it finally broke. So this may not happen until earnings, so I just sit around and wait for that to occur. So anyways, Facebook holding above the low but still coming in 38 cents. Anyways, so that see if you see stocks that look like this, your first sign of a shortable breach would be the thing blows through the 20-day line on the downside on big volume, and that's what you'd be looking at. And you can read all about that in our short selling book, Short Selling with the O'Neill Disciples. So anyways, that's that. And so you can see, I see a bifurcated market. I don't see a market with any heavy-duty trends, even though the index trend is up. So I think if you're long on the MDM, you're doing great, and short the VIX, you're doing great. But in terms of individual stocks, it's like a little this, a little that, a whole lot of nothing. And I'd like to see some more concerted action one way or the other as a way to make big money, because I don't really think this has been a big money market so far, despite the Dow getting over 20,000. Any final thoughts, Dr. K, before we sign off?
Yeah, it's the VIX model. VIX volatility model is once again showing that even in a sideways market, it can profit. It's done this a number of times. And so this is nothing new to the model, and of course the model was inspired by the trendless nature of 2015, which was incredibly challenging and frustrating for many people. So it was very profitable in 2015 despite the trendlessness of that. So it's good to see that that is one component that goes into this model that has so far made it successful, very successful for this year.
Yeah, it's doing well in 2017. But I've watched you put a lot of blood, sweat, and tears in that. Mostly tears, but I think you got it now. I think
labor
it seems
of love.
to be what?
Such a labor of love, indeed.
Yes, exactly.
It's something that started years ago, actually, and it was more of a very short-term day trading thing, which I found worked, but it wasn't part of my trading personality. So I was growing resentful, even though I was making money. It was taking too much of my time, and if you just go to the bathroom, or if you're just not at your screen all the time, you could miss an important trade. So it was a source of frustration, and then 2015 was a blessing in disguise, because then that's what brought on going back to the research workbench, so to speak, and connecting the dots and seeing something I hadn't seen before. So and obviously 2016 by many media accounts was maybe the most challenging market we've had. It seems like every year media accounts will say, oh, okay, 2015 was the most challenging, and then 2016 is the most challenging. 2017 hopefully will be a reset of some sort, and if we do get some whether we get volatility, the model loves volatility, so I think that would be great. But if we also get a nice uptrend, as you can see, the model can do very well in these kinds of, well, let's just say uptrending or sideways trending environments that are relatively quiet. Yeah, we'll have to stay tuned. But so far, so good.
All right, everyone. Thanks for showing up. Have a great week, and we'll catch you next week.
So long, everyone.